One upside to all this market volatility, mortgage rates dropping sharply, and that showed up big time in the weekly applications. Want to get over to Diana Olick, who has the new numbers just released a few minutes ago. Diana.
Yeah, Andrew, no asterisks on these numbers. A huge week for the mortgage market. Total application volume jumped just over 15% for the week ending last Friday, according to the Mortgage Bankers Association, all thanks to plunging mortgage rates that caused a big spike in refinancing. The average rate on the 30-year fixed with conforming loan balances fell to 3.57% from 3.73%. That's for loans with 20% down. And rates hit a record low to start this week. 1 year ago, the average rate was 4.67%, 110 basis points higher. Now, that drop caused a 26% surge in weekly refinance applications. That's big. Compared with 1 year ago, refinance volume was nearly 224% higher. I read that right. An MBA spokesman said they will be updating their annual forecast later this week, calling for a big uptick in refinances this year. Now, I spoke with Jay Farner, CEO of Quicken Loans, late yesterday. He said they had a record day Monday and likely Tuesday of this week as well for application volume, and one new tool is helping them handle the surge.
The way that we leverage technology to communicate with our clients, to make it easy for them to make a mortgage application, for our underwriters, we can scale very quickly, which helps us when we see increased volume like this.
Now, mortgage applications to purchase a home did not respond as well, falling 3% for the week. They were 10% higher compared with 1 year ago. Buyers today are obviously weighing the benefit of those low rates against the concern about the coronavirus hitting the economy and the stock market. They're also still up against a historically tight supply of homes for sale. Back to you guys.
Diana, let's do a little sort of regular consumer economics here. What's the number? Is it a half a point? I know Becky is like skipping down the sidewalks here
it's a big deal.
with her new mortgage rate. She's so
part
excited.
Of the numbers, right?
It's like you come in the morning, she says good morning, she goes 3.1.
Yeah.
125.
Good morning.
Yeah.
3.125.
Okay, 110 basis points from a year ago. Now, any expert in the mortgage market will tell you that you need to get a reduction of 75 basis points to make it worth your while. 75
Becky's shaking
basis
her
points.
head.
Not if you don't plan on moving, you don't.
Well, but if you're looking at maybe going to a 10-year ARM, which could be lower, or your 30-year fix, which is longer, it depends on when you just...
It does depend. There's a lot of different
I tell people
it depends on what your cup of tea is, but rates are incredibly low right now. And when we ask, will we see them go much lower, there is going to be that tipping point where investors in mortgage-backed bonds are going to say, not worth my time, and that's going to hold the rates where they are. So
it also depends on how complicated it is. I mean, some of these places have made it very easy to refinance, and you don't have to do much of anything. It doesn't take much of your time.
And that's what the Quicken CEO is saying, is that technology has really streamlined the process.
So, Diana, you're sticking with
70.
You're sticking with 75. I mean, I think
I'm not sticking with it. That's what the experts tell me. I got a lot of mortgage wonks out there that I talk to, and they say 75 basis points makes it worth your while. Anything less than that, you're going to be paying more.